Well, hello everybody. Blair Nightingale here. It is time for our Stock Talk Thursday. It's a cool opportunity to just come together every Thursday and actually just look at some specific stocks. Last Monday, we did our Market Monday, and we covered a lot of ground there. We got to talk about a lot of different topics on our Market Mondays. That's what we get to do. Today, I want to actually look at some stocks, and that's the benefit. Today, I'm going to do a few more than this, but I'm going to look at what we call the FANG stocks. Okay, that's a slang, if you will, a term, an acronym that Wall Street has begun to use for some time now. That stands for Facebook, Amazon, Netflix, and Google. Okay, just big stocks out there. We mentioned on Monday we're in a special time. There's 4 of these a year. It's the earnings season, and many companies are reporting earnings. If you missed that episode, I recommend you go back. So much good information from what we talked about on Monday will be helpful for you as you are looking at the stock market. And certainly that was the foundation for today, because today I want to go and take some of those, quote, FANG stocks and a couple other ones that folks like to follow, very popular stocks. And I want to actually look at their earnings a little bit. Now, I'm not going to dive into deep financials. We're going to look at the stock chart, right? We're going to do what we've done on here many times. We're going to actually look at the stock chart. I know a lot of people out there. I hear from you guys. I talk to you guys. You're coming on here on Mondays and Thursdays. Maybe you're even joining us on our Tuesdays and Wednesdays now. Specifically, we're doing stocks at the bookends of the week, if you will, but we do our trading tip Tuesday as well as our word Wednesday. So you guys are coming and joining here, and a lot of you I know are just looking for some exposure to the stock market. Some of you are more experienced than others, but you're really just looking for some exposure to the stock market. So I thought this week what could be very helpful for us, if you've been following along, is after we talked about earnings on Monday. What is it? Why does it happen? Why does it matter? How do I know when it's going to happen? We talked about all of that on Monday. Today, I want to show you some things that I think are really important when we've actually had earnings, right? They're not coming, they've actually happened. All of the companies' stocks we're going to look at tonight, the earnings reports have actually just recently come out. And we're going to just look at what does this mean for us as traders. And you're going to find out why over here at Tradeway, we always tell folks we do not own the stock over earnings. Now, I said on Monday, I'll say it again tonight so that we don't get any confusion in here. I say that when we're talking about trading stocks, not just investing. Okay, there is a difference between trading stocks. For 3 days to 3 weeks, we would own the stock, minimum, maximum, right? And that would be trading, and investing, which is going to typically be something that we're going to buy and hold for a very long time. We're not looking to actively manage that. We're not looking to get in and get out and take advantage of price fluctuations. We're looking to hold on, ride it. Obviously, our intention would be that the stock would go up, and then at some date in the future, we might sell the stock. So that's a totally different skill set. In trading, we don't hold the stock over earnings. You need a very particular skill set to be able to trade stocks over earnings. And where we're at right now, we just don't do it. Now, that said, as always, I want to invite you guys, jump into that comment box. The biggest thing that we can do here, whether you have a question regarding our specific topic or one of the stocks we're going to look at tonight, or something else entirely, I invite you guys to go ahead and jump in with your questions. Let me know if you have any questions. One of the things I got to say, guys, I'm learning more and more as I am in the environment of coaching people when we're talking about finances. The more I do this, the more I see that most people, now this isn't all people, maybe I'm not referring to you, but most people don't like to ask questions when it comes to money because they tell themselves that they should just know. We should just know. or we just don't want others to know what we don't know, right? If I ask a question, then I've got to give away something that I don't know, and somebody else might see that. I would just invite you, if you have a question, if you have something that you would really like to ask, I would just invite you to not let that fear hold you back tonight. If there's some way that I can help you in a deeper and more specific way, then a question in our comment box is an excellent way to do that. And why let the fear of man steal that from you tonight? So please go ahead. If you're with us tonight, you can always say hello. You can always drop your name in the comments there, as many normally do as we get together on Mondays and Thursdays, but also questions. Okay, questions are invited for sure. So what I'm going to do now, I'm going to go ahead and share my screen so you guys can see these charts. And we're just going to go through here real simple tonight, everybody. We talked about earnings, but what does it really look like when a company reports earnings? So I'm going to show you a couple things. I'm going to show you 6 stocks tonight. Now, you've probably heard of all of these. I'd be very surprised if you hadn't heard of all 6 of the stocks. You can see them on the right side of my screen. I've got them in a watch list there. There are 6 stocks that you've probably heard of, very popular. I'm going to show you the chart, what happened on the chart. We're going to look at a little bit of news around the earnings report, and then we're going to come back and we're going to look at the chart, and I'm going to give you a thought to chew on for each of these stocks. Does that sound good tonight to do that? We're going to get a chance to dive into one, come back to the chart, and then we're going to go back and we're going to look at the chart. We're going to go to some news, and we're going to come back to the chart. Okay, so let's go ahead and dive in. Now, I mentioned we're going to have a couple that aren't the, quote, FANG stocks. Now, that would be Facebook, Amazon, okay, Netflix, Google. But I've also put Tesla, and I've also put Apple in here. Big earnings today was Apple. The markets, of course, are always watching Apple. And there are so many other huge companies that I could have put in this list. There's no doubt that there are a lot of other major players that could have made this list. But these are the 6 that we're going to look at tonight. And I think these are pretty pivotal. These are pretty big. And they're also more recent. So I've got them in there as well for that reason. So I'm really going to start. I'm going to kind of go through. Let me just see if I can organize that. There we go. Alrighty. So the first one we're going to look at is Netflix. Okay. So Netflix, what happened? Well, Netflix had an earnings report on April 22nd. Okay. So that means most likely, if I remember correctly, it was after the bell. We talked about that on Monday, meaning once the stock market closed at 3 p.m. Central Standard Time, Netflix publicly released their quarterly earnings results. And that usually comes, it's an earnings call. They're going to come out. They're going to say, these are, things that are specific to Netflix. How much money did we make? Okay. How much money did we make? How many subscribers did we add? How many subscribers maybe did we lose? Obviously, that's a big deal for someone like Netflix, right? If you and I are signing up for Netflix in big numbers, we're getting maybe more premium memberships, et cetera. Those are the kinds of things that they're going to talk about. Well, they came out, and very interestingly, and this is what I want you guys to get about this, right? They came out and said that their revenue went higher by 24%. Okay. So Netflix actually made 24% higher revenue in that quarter than they did before. 24% is pretty significant, right? That's pretty significant. But take a look at the chart here, everybody. This is where we were before earnings. Let me go ahead and do this for you here. Like that. Okay. And here's where we went after earnings. The price gapped down. It gapped down is the way we would say that. Meaning the price closed here, but the next day it didn't open right below that. It opened all the way down here at about $510, right? So it lost $50 a share overnight, right? that is part of the reason that we don't stay in earnings overnight, because it often, right? It's very likely that there's going to be a big move in the price of the stock. And while we could benefit from that move, it could gap up, we also could really get hurt by that move. And there's no way that we can manage that risk just staying in the play overnight, because it's a coin flip, right? It's going to go one way or the other. Now, let me add this, and this is something I wanted to show you guys today. If the stock price gaps down, but the revenue went up, isn't that a little confusing, right? A lot of times investors, traders in particular, especially in the early days, everyone, okay? Especially in the early days, they might feel like, I think I could guess. I think I can guess. Netflix is going to, man, it's pandemic, lockdowns. They're going to have higher. We start filling in the blanks and we think we know what's going to happen. Well, let's just say you had thought, okay, it's going to go up, right? They're going to make more money. You would have been right about that, right? You would have been right about Netflix. And yet it went down anyway. Investors gapped the stock down by selling it because they didn't like something that Netflix said. And that was that they did not add subscribers. In fact, they actually lost subscribers significantly. Okay. So if they lose subscribers, that's something that's very important to Netflix's future. So they are letting us know that that's really slowing down. That's going to affect things in the future. And that meant it dropped. Well, how could we have known about that? Well, we couldn't have, of course. We couldn't have known about that. So it gaps down, and now it's just kind of been going sideways. So we may have an idea of where a stock is going to go, and then it ends up going the other way, right? They made more money, but it went down anyway. This is what's very unpredictable. Now, I'd like to just say, and I talked about this the other day. This specific stock is in a pattern. Now, the stock gapped down, but it actually gapped down into our support line here, okay? Now, it's not doing anything noteworthy yet, but I think it's very interesting that even though it gapped down, it stayed within that pattern. That does not always happen. In fact, earnings can often upset a pattern, change the pattern for sure. So that's what's happening in Netflix. And I mentioned, I'm going to go over here if you can see this, right? Dramatic slowdown in subscribers. That's the headline, right? Look at this second headline here, though. Company's revenue still grew 24% year over year and was in line with its forecast. It grew and did what they said it was going to do, and the stock gapped down. So I'm hoping tonight to paint a little bit of a picture for you. This is why earnings is so important. Okay, this is why earnings is so important, that we have good self-control when it comes to earnings as a trader. Okay, Yolanda, I can see you there. Good evening, everyone. She says, hoping everyone is well. Still working. All right. Thank you for joining us, Yolanda. Been checking my Social Security. Okay. So you're looking at some of your financials and perhaps looking for a way to invest that, trade some of that perhaps. I can't necessarily make any comments on that based on the information that I have. But of course, everybody coming, as I mentioned already, you've got a reason, right? You've got a reason to be here. You're joining us week after week because obviously you're looking to get involved in some way. So thank you for sharing that goal. And of course, that's our goal here, is to continue to give you what you need to feel like you understand more about the world of stocks. And of course, this is all really just the beginning, right? This is just the foundation that we really go into here. Once you get into a program with Tradeway, you get into our coaching programs, you actually begin to learn our strategies and have some practical help in implementing those strategies. That's when we're really in the process of becoming a trader. This is exposing you to what being a trader is like and some of the key things that we teach our students. But ultimately, the process to become a trader is in one of the programs for sure. Okay, so we're starting there. That is Netflix. Well, let's flip the script a little bit here. All right. What about Facebook? What happened to Facebook? Anybody out there following these stocks? If you've been following these stocks, go ahead, pop some comments in there. And of course, I know we're going to have a lot of folks, the majority of our folks, join us on recording because as Yolanda shared with us, you may be at work, you got something going on. So you're going to be joining us on the recording. Thank you for being here as well. But if you're here live tonight, again, feel free to pop in there. What's going on with Facebook? Let's take a look. Facebook, here's the chart. All right, let me get rid of all these lines and this noise that's on here for now. We had a bit of an uptrend going on in the stock. We've looked at this, okay? It broke out of that. You could even bring that down to, bring this down to the 20-day. Okay. Gets really close to earnings, and it's definitely, it's okay if we're in a play closer to earnings. We've got to know that the closer we get to the earnings date itself, the more volatility can come into that stock, the more unpredictability can come into that stock, as it doesn't tend to stay in pattern when it does something like a big earnings report. Well, in this case, what happened? All right, I said we look at the chart and then we'll jump over here. Trusty CNBC report. Not going too far into the news here. Don't really need to do that. Just a little bit of information on what happened. Well, look at this. Facebook revenue rises 50%. I mean, 48%, right? Roughly 50, driven by higher priced ads. So they charge more for their advertising, and they did more advertising, and they made 50% more. I mean, it's massive. Okay. Massive. So what happened? Up it went. Now, in this case, unlike Netflix, there wasn't, significantly less traffic or something to that effect. There are different pieces of the puzzle here that you and I don't necessarily understand. We don't necessarily need to understand. Okay. We just need to know we don't need to be in on earnings. But look at what happened here. Facebook beats on earnings. That's how Wall Street says it. They missed on earnings. They beat on earnings. And the stock gaps up and stays up. See, they sold off a little bit during the day, and then the market began to move back up about halfway, around noon or so today. The market turned around and started moving back up. The buyers came in, drove the price up. You can see here, Facebook did the same thing. Really what happens is, a lot of investors are in this at $300. They wake up in the morning and they just made an instant $30 a share on the stock. And they said, we're going to sell the stock now. We're going to take profits. Well, once they sell the stock, it floods the market with more shares and the value goes down. Clearly, though, investors around the turnaround today, around, like I said, noon, started jumping back in, and they were happy to buy Facebook at $322 a share and drive it back up, basically where it opened this morning after earnings. So we'll see where Facebook goes from here. Amazing to think that, not that long ago, Facebook was way down here. Look at this, guys. That's $95. Even over here, we're in January 2019 at $128. And here we are up at $330. So Facebook definitely doing well on earnings. So let's go ahead and get rid of Netflix and Facebook. Yolanda says, what about all the cancel culture within Facebook as a stock? There's probably some backlash where certain people didn't want to use Facebook. Certain people don't want to use Twitter, social media sites that they see as unfairly or in a biased manner, banning certain perspectives, obviously very politically charged. But it's really not going to matter to Wall Street unless the bottom line gets hurt, right? Unless the bottom line for Facebook really gets hurt and they are losing money because they're losing subscribers, then ultimately Wall Street's not going to care about that, All right. Now, people on Wall Street may have different political perspectives and they may be personally invested in that. But when it comes to the stock price itself, I tell people in our programs all the time, we have to look at Wall Street in the way that Wall Street wants to look at stocks, right? What does that mean? What do I mean by that? It means that we can't think Wall Street's going to do something because it matters to us. Wall Street is going to do what they're going to do because it matters to them. What matters to Wall Street in terms of finance? How much money did they make, right? There are other things. Remember, we said subscribers with Netflix, but how much money did they make? And if Facebook made 48% higher revenue, right, and didn't lose a lot of traffic, then yes, there may be controversy about political agendas, cancel culture, as you mentioned, Yolanda, censorship, unfair bias, however we perceive that, but it's not going to affect Wall Street unless the bottom line is affected. And in this case, it was not, right? It was not affected. And for that reason, Facebook is holding strong. For those kinds of things to, a boycott, for example, to really make a difference, it has to be sustained. A lot of people would have to abstain from using Facebook, closing their accounts. And of course, people were putting ad money into their Facebook accounts, and that's why Facebook made so much money. So advertisers were still definitely using Facebook during this entire season, and for that reason, it kept going up. Thank you so much for asking that question. It's a great question. It's a great question, and it opens up a bigger topic, like I said, where we can often think, well, somebody asked me the other day about the current administration, some of the policies, and he said, when I hear certain policies, I think XYZ should happen to the market. I feel like it should be going down. But the market's going to go up as long as the market's going to go up, right? They're going to care about what they care about. And right now, Wall Street cares about the fact that there's cheap money, right? There's a lot of stimulus money. Interest rates are low. These are things we talked about on Monday, and that's just going to keep that market going up. While I'm on it, I'll come back to this, of course. But our market closed at an all-time high today, right? We were going sideways along this line, and we finally popped up today and closed at an all-time high. So they're happy to continue driving that stock higher. In this case, the whole market. All right, continuing along with our FANG stocks. So we actually looked at, in a different order, we looked at Netflix. We've looked at Facebook now. What about Amazon? Amazon reported earnings today. Okay. Actually, I think it was yesterday. No, it was today. I did get that. I get so many CNBC alerts on my phone. Sometimes I forget exactly when it was. And there's a lot of earnings reports going on right now. So you can see right here, 44%. They sold 44. Sales went up 44%. Now, you can imagine when it comes to Amazon, right? In the pandemic, they've been a cash cow, right? That's where a lot of people have been willing to go. Now, of course, Amazon is wildly popular anyway, but a lot of people have been willing to go there because of the pandemic, and they've benefited greatly from that. And even though we're coming into a reopening, we're coming out of that, Amazon continues to obviously be a staple in households getting the goods that they need, the things they want to buy, but it's also sustained from the pandemic. More people bought more things from them, and now they're not necessarily going back to what they maybe used to do, but they're continuing to purchase from Amazon. What's interesting here with Amazon is, notice that we see a huge move, but this was just today, right? So we're still waiting to see, is this stock going to move dramatically up tomorrow? Is it still going to be flat? We can't actually see on the chart here because, again, it just reported after the bell today. So this is actually today's activity, pre-earnings on the chart here, which for the most part is just pretty predictable price movement here. Nothing too crazy going on in the chart. It does show me some post-market pricing down here. It's just about 3% up after hours. I would gather the number is going to be significantly higher than that one way or the other based on the earnings that they reported, of course. So huge move. Amazon being, $3,500 a share, for Amazon to move $100 after hours is a decent move. It's a 3% move, but I suspect that we're going to see quite a bit stronger movement on the stock by the time we open tomorrow morning. Of course, we'll have to wait and see. But Amazon, a little bit different than the other ones we looked at, right? We've got to wait to see where that one goes, but definitely a big number coming out of Amazon. And honestly, Amazon just seems to just crush earnings every single time they report earnings. It's just getting bigger and bigger and bigger and bigger. Let me check, make sure we don't have any questions over here. Amazon, and then we're going to go ahead and go over to Google. Now, Google is again, I said Facebook, Amazon, Netflix, Google. Google's obviously a big one. Notice how, we've got a lot of tech here, right? Tech is a big deal. We've talked about that a lot recently. We closed just the other day, right? So earnings wasn't today. This was actually on Tuesday after the bell. It gaps up and we got that sell-off. This is what's interesting. The day of, it sells off. What happened? Investors started to take profits. It's not even that investors necessarily say, oh, no, Google's not worth that, right? We would never pay that much after it gapped up. No, they're just taking some profits. They're taking some profits. The profit taking stopped, didn't take very long. And today they actually gapped the stock up and then continued up for most of the day. So they're happy to jump in and buy at these levels. So Google obviously having really positive earnings here as well. Seeing some of that profit taking in the short term, but buyers stepping right back in and lifting the stock today as the market went up. So the big one today, Apple. Now, this is so interesting to me. Because, Apple didn't ultimately do a whole lot. Apple had absolute blowout earnings, and you can actually see it here in the headline. Apple reports another blowout quarter, sales up 54%. 54. So we've heard that a few times tonight, haven't we? Some of these tech companies are making enormous amounts of money. Now, think about what we're doing, the life we're living, in the world we're living in. Probably, I don't have data on this, but don't you think probably most people are spending more time on their devices than they've ever spent? And again, I think as we come out of pandemic conditions, we've still in some ways been conditioned by the pandemic. And that doesn't mean that every habit we maybe built in that space or every change we made is just going to be undone and we go back to the way it was. So we're on Zoom calls, right? We're watching on Facebook Live. We're on YouTube Live. We're doing more online classes. Everything we do at Tradeway is online now. We're going to actually start doing live again this year, but everything we do is online. And that's so true for so many people, so many companies. And Apple has certainly been on the receiving end of that. Now, it says also they authorized $90 billion in share buyback. So what that means is Apple is going to spend $90 billion and buy back millions and millions of shares of their stock and take that out of the open market, and they will actually own that again. And so that is definitely that's definitely something that they announced that they're going to do, and that of course is going to raise the price of the stock. Now, how that's going to play out in the longer term, we have to see, but they've definitely said we're going to buy some of that back. But 54%, huge. And then look what happened. Well, we gapped up a little and then they sold it. So you see how we're hearing similar headlines, but that doesn't necessarily mean that the stock is going to do this thing or that thing, right? Earnings can go many different ways. It can be interpreted different ways. So guessing, gambling, or going for it on earnings is ultimately not something that we want to do. In this case, it goes up, they sold off. I suspect based on Apple being very strong, right, we're going to see some strong movement from Apple over the medium term here, I don't expect that Apple is going to be struggling in any way. But in the shorter term, this definitely, we're right in this level right here, technically speaking, where some people might be very apt to take profits, right? We've been into this level before multiple times and sold off. So we may do the same thing right here. And today may have been the start of that, which is what's happening on the chart. But the earnings, of course, is positive, and that's going to give us a view over the longer term. Traders are going to make decisions based on what's happening on the chart primarily. Now, not only, but primarily on what's happening on the chart versus the long-term buy and hold investors, okay? So last up, we've got Tesla. Now, Tesla, also very interesting. I think I've got this highlighted on here, or at least I did. They reported 93 cents, higher earnings than expected. Okay, so I mentioned there are these analysts, top analysts on Wall Street, and they crunch all the data and they look at all the numbers and they look at Tesla and they say, this is what we expect Tesla to report when they report, right? This is the benchmark. And then when they actually report, they either beat that benchmark or they missed that benchmark. Well, in this case, Tesla beat that benchmark, okay? They definitely beat. However, what's interesting is those bottom line numbers, right? Get this. What does Tesla do, right? What is the company, right? What does the company ultimately do? Well, they make electric cars, right? They make it's a car, it's an auto manufacturer, right? Now it's electric cars, but Tesla reported an enormous amount of money made, not just from cars, but actually from Bitcoin, okay? From Bitcoin. Now, I believe there's something that I was going to look for the specific number on here. I want to say it's an enormous number, but they actually had spent a lot of time mining Bitcoin, and I believe, if I'm not mistaken on this, I just heard something earlier today. They've sold or have been selling off that Bitcoin already. Now, wait a second. You got a company who reported earnings. They beat on earnings, but guess what? Some of those earnings wasn't even from cars, right? They owned Bitcoin. And so that is definitely affecting the stock. So Elon Musk over there at Tesla, continuing to be a very interesting individual, definitely doing out-of-the-box things, which is, of course, what makes it the company that it is, just doing things out of the box. But clearly, some profit-taking here. In fact, in this case, if I zoom in, Tesla actually gapped down. So they beat on earnings and yet went down, okay? If you had heard the report and you're in Tesla and you heard they beat on earnings, you might be going, good, it's going to gap up. I'm just going to do really well. And that's not always the case. It depends on how that information is interpreted by Wall Street. And of course, does Bitcoin have something to do with that? Well, very, very well could have. But super fascinating, very interesting that they would be investing in Bitcoin. Of course, that would be a part of their report. They said that in the report. So Tesla definitely, again, outside the box there for sure. Okay. Yolanda is saying what Tesla stock? So TSLA, Tesla stock. That is the only stock that they trade, that Tesla is traded at. That's the ticker for that stock. There are other electric auto manufacturers that you could purchase their shares, but of course, just one Tesla. So that's the one I was just showing you there. Yeah, that ultimately concludes Tesla. Okay, everybody, thank you so much for being on tonight. A little bit of a look at how earnings can go any which way, right? Did we see that tonight? Any which way earnings can go, even though it might have been positive, right? It might have been positive. Now, some company may not have earned as much as they were expected, but some other metric in their company may have been very positive, and actually they could miss and the stock could go up. So there is so many things that can happen. I tell you all the time, it's never guessing, gambling, or going for it. So when we come to earnings as traders, we liquidate the position. Not if we're doing the long term, but if we're doing the short term, we just don't stay in over earnings. This is a good look at why. I would say, hot or not, it's what we talk about here on Stock Talk Thursday. Trading earnings, definitely not, unless you have the skill set. Unless you have the skill set to be able to do that, then we're just guessing, right? We're just guessing, and we don't want to do that. So that concludes our Stock Talk Thursday. Looking at earnings, special kind of combined sessions this week from Monday to today. Hope that you had you have a much better understanding now what all this earnings stuff is really all about. How does this work? And how do these companies report driving these stocks? And how does Wall Street respond to that ultimately as that information becomes public? If you guys need anything at all, you can head on over to www.tradeway.com and you can find our classes there if you want to jump into our 2-day Step 1 Start Your Journey stock trading event. If you're looking to learn to trade, that's a great place to start. We also have a 30-day challenge coming up. You can sign up for that at tradeway.com as well. It actually starts on Monday. We're going to take 30 days, take our entire foundational system. For those of you out there who've been interested in getting started but haven't done so yet, we're going to give you bite-sized chunks every day for 1 month, plus sessions with myself and other coaches here at Tradeway to help you get moving. You're going to get your at-home stock trading business set up, right? You're going to get the foundational information you need to begin to paper trade and practice trading in a safe way. It's an absolutely amazing 30-day experience to get you going from zero to trade, and it's done in bite-sized chunks. We've got quizzes, we've got rest days in there. It's definitely something that you can do to get you going. And as I said to somebody I was speaking to on the phone earlier today, we all have goals. We all have places we want to get to. And there's that monster voice. Okay, I spoke about this last weekend at our Word on Investing Summit, and that voice is procrastination. Do it later. Do it some other time. Do it tomorrow. If you're here tonight, likely you not only want to change your financial future, but there is a specific reason that you are coming and spending 45, 50 minutes with me on a Monday and a Thursday to learn about the stock market, because it's not about just making more money, is it? It's about being ready for retirement, right? It's about sending someone to college. It's about getting debts paid off. It's about getting out of the job that you don't want to be in. It's about getting into the thing that makes you come alive. And maybe it's all of the above. All of those things matter. And if not here, if not this, if not now, then what and when? 30-day challenge, very easy way to start that journey. So I highly recommend that for everybody. And I actually am going to just go ahead. As I said, you can head on over there, but let me go ahead and just pop this in here for you guys, both at Facebook and YouTube. There is the 30-day challenge link posted right there for you. So if you're joining live tonight, you'll see that recording. It'll still be there in the comments. If you haven't already, like and subscribe, Facebook, YouTube. Just click that like button on Facebook, click that subscribe button on YouTube, and we'll let you know anytime we're going live. That way you don't miss anything. If you're busy, it's going to let you know. You can go back, watch the recordings. Of course, you can always go back and you can watch everything we've done from the very beginning. Scroll on down on the YouTube page. You'll see it on uploads at the bottom, and we can definitely get you caught up right there. Thanks so much, everybody, for being on tonight, and we'll see you next time. Good night.